Well, this is Beyond the Numbers, and this is actually Joy News, and welcome to the Reshape edition of Ghana's leading analytical show, Beyond the Numbers.
We are coming to you live from our studios here in Kumimla in Accra, bringing you sharp market analysis, clear economic context, and global insight 3 times a week. That is Mondays and Wednesdays from 1 p.m. to 2 p.m. and then our big Friday edition from 3:30 p.m. to 4:30 p.m.
Well, this edition comes with packed, finance, economics, markets, and politics. We start with big data headlines, a quick look at the key numbers shaping business in the day.
Then we move into Market Watch, where we track what is happening in the market from stocks and bonds to interest rates and currencies.
Well, and finally, the big analysis where we head to the touch screen, to break down the biggest, business story of the day and then also explain what it really means to you.
Now, so let's get straight into the big data headlines. Kofi, where do we begin?
We'll definitely start with the energy sector, and that is where we are starting from. If you started with the energy sector, what we know is that the energy sector government has actually secured a $3.5 billion in fresh investment to support, Ghana's oil as the industry, prepares to actually move on.
An MOU has been signed with partners in the Jubilee and 10 fields, as well as offshore Cape 3 points. Under the deal, Jubilee and 10 partners are expected to invest $3 billion, while OCTP partners bring in $1.5 billion, all aimed at boosting production and expanding reserves.
Well, Orenson, I want you to go to the oil industry. What is happening also there?
Great. From the oil, the Ghana Chamber of Mines wants government to slow down on the proposed 5 to 12% slide in royalty system or scrap the growth and sustainability levy before introducing a new royalty structure. The Chamber says a 4 to 8% range without the levy will be fairer and more attractive to investors.
Now I want us to head to the capital markets, where demand for government treasury bills actually remains strong as government exceeds its target by 246%. And even after lowering, the target to 4.9 billion cedis. A strong demand comes amid fall in interest rates, where we know that the 91-day bill dropped from 9.99% and the 182-day bill also dropped from 11.81%, and the 364-day bill actually eased to 12.06%.
Those are some notable moves there, Kofi. On the currency front, easing global tensions and a softer US dollar are expected to give the cedi some breathing space in the near term, as the Securities and Exchange Commission imposes strict new limits on how collective investment schemes can invest in foreign stocks and bonds.
Well, Winston, finally, the agribusiness, where the Chamber of Agribusiness Ghana is warning that the country could lose up to $21.3 billion in economic value and about 435,000 jobs over the next 5 years. This, they say, follows Benin's push to attract manufacturers and investors from Nigeria, Ghana, and the wider West African region.
This indeed is what we have for you here on Beyond the Numbers, a more insightful conversation. Now let's move to Market Watch, where we bring you up-to-date conversation from data bank research, especially on how the stock market has performed over this week. Stay here. This is Beyond the Numbers on JoyNews.
Well, welcome to Beyond the Numbers, and we go straight to Market Watch, where we are crossing over to data bank research, where Grace Monanyun, she is a research analyst, joining us via Zoom. Grace, good afternoon. Welcome to Beyond the Numbers. Hello, Grace, can you hear us?
Yes, can you hear me?
Absolutely, we can hear you. And we are eager to know what is happening. It's after midday. We want to know what is happening in the market. What is really happening? Who are the top gainers at the moment? And in terms of watching, who are we to watch in terms of the bottom 5 and then also the top 5 gainers at the moment?
Right. Thank you for hosting me. In terms of who are gaining on the markets as it stands now, you see the likes of Guinness Ghana. We've seen a lot of interest on the stock from investors, especially maybe anticipating some good numbers in full year 2025. Sorry. We also see Cal Bank, a lot of interest on the counter. falling from last year in terms of interest on the market from investors knowing sure that they exceeded their targets for the capital raising, and so there's currently confidence in the markets on the counter. So we've seen the counter do about 25% year-to-date returns, and yes, I mean investors are still favoring the counter on the market. So City General Ghana also follows up. We've seen its return about 22% year-to-date, and it's a good buy for investors seeking to add on to their portfolio in terms of the banking sector. Investors could also look for some dividend-seeking invest in terms of some seeking dividends counters such as EGL. We also see investors looking for penny stocks such as CPC. In terms of what counters are lagging, we could talk to Cowbank. In terms of laggers, we could see Total Energies dropping. Investors are pitching the counter as overvalued in the markets, and as a result, they are selling off as we stand now. So in terms of laggards on the market, we are looking at Total Energies. Also, we are considering New Gold as a laggard for this year. Reason being that gold prices on the markets are currently dipping, so investors are trying to mirror its performance on the global markets. So yeah.
That there's an African country that doesn't want to recognize Total and other, oil marketing companies. Is it one of the reasons why Total Energies is part of the laggards today?
We could say, but on a certainty, we could just say investors are looking at the counter being overpriced on the market, like I mentioned earlier on, and they're just selling out to make profits, basically.
All right, Grace, I want to understand from you. We've seen inflation coming down, macroeconomic indicators looking quite good. What is the linkages between the performance on the Ghana Stock Exchange in reference to this and the benefit to businesses on the stock?
Right, thank you. So if you look at inflation numbers, you're doing about below 3% this year, and that's currently a good move for investors. So if you're looking at pricing on the market, investors may look at the fact that, yeah, if inflation declines, then it's a good pricing key for counters, stocks such as the Total Energies on the market. In terms of cost pressures, you are looking at it to decline for operations, and therefore channels in good numbers, full year numbers, which will translate into dividend payments at the end of the year, at the end of the period. So yes, inflation declining, a good metric for business thriving on the market. Investors are looking for cost pressures to reduce, especially importation costs to reduce in terms of operational fronts for the market, for the stocks listed on the exchange, which will drive revenue growth and then in turn profitability on the market. For investors, counters translating into dividend payments to their shareholders, returning value to their shareholders in forms of dividend payments.
Grace, I want to understand from you. Past week, we've seen one sector that is quite having a very interesting buzz in the media, which is the petroleum sector. Those playing on the key stock markets, what would you say the huge demand for their product somehow reflects, as it reflected in their performance on the stock?
Oil and Star Oil, right?
Exactly, over the week.
Yeah, it has reflected. We've seen a lot of buy interest on gold as it stands now, and we believe it's because of price reduction on the market, which investors are pricing in onto the stock market. Meaning, the companies are most likely to perform well and get into the close of the year and return some dividends to shareholders in terms of returning value to shareholders.
Okay, Grace, you saw that big number on the smart wall, which is the Treasury bill market. What we have seen is the oversubscription by more than 200%. I don't know from your end if you have actually studied it, and has there been a pass-through effect from the Treasury bill markets?
Right. I mean, yields are declining on the Treasury bill markets as it stands now. Investors are looking out for other alternative investment schemes, and stock markets is most likely one of, as we saw from last year. It's definitely translating into this year's performance on the stock market. We believe even this month, government is looking at paying some coupons as it has been historically. So liquidity on the market is going to go high. We expect that investors who may not get their desired rates on the market in terms of the trading market move back onto the fixing the stock market as it stands now, driving more interest in the counters listed on the exchange.
Away from equities, how are bonds performing?
Right, bonds so great in terms of liquidity. We've seen some improvements compared to the previous week, and I think the market is picking up gradually. We expect to see more of that coming forward.
Thank you very much, Grace. It's interesting to know what is happening on the stock market, and certainly be following up before the close of this week on key performances on the Ghana Stock Exchange, as well as where your money and what your money is doing for you here on Beyond the Numbers. Kofi.
Well, after this short break, we'll go into the big analysis, and Caleb Ziblim will join us for that big analysis. We'll be focusing on Ghana's attempt to actually introduce a sliding royalties rate. The pure target is about 5 to 12%. There's an industry pushback. We'll be analyzing everything here, why government is looking for that big amount of money, especially from the royalty space, and why the industry is pushing back. This is Beyond the Numbers. Stay with us. We'll be back shortly. And you're welcome back on the show. And as you see, Caleb Ziblin joining us. It's big analysis time, and we are focusing on Ghana's proposed sliding royalties rates. The preferred rate is 12%, but we've seen industry pushback. And I want Caleb Ziblin to start with this, because you have written extensively on this issue. Ghana wants 5 to 12%, but the industry is pushing back. Preferably, they want a smaller bound. What more do we know about this proposal?
So we know that at the end of Parliament sitting before the Christmas recess, the Lance Minister surprisingly laid legislations to the effect that there's going to be a new sliding scale royalty structure. Now, the problem is that before that, we're all unaware that the minister was going to lay these regulations for the entire sector. We knew the lithium lease was before Parliament, and then the government reduced it from the 10% headline we had earlier on to 5%. And the government said, well, they need to introduce a sliding scale to accommodate the 5 to 10%. So now, industry watchers thought that the new legislation was going to take care of only lithium. But then when the minister laid it on the floor, we saw that gold, manganese, and almost all the other minerals were a part of this new legislation. And then the royalty rate is almost every $500 increase in the price of gold, you get about a percentage increase in the royalty rate. So it goes up from 5% to 12%. So this is the same for gold and lithium. So gold and lithium gets 5 to 12% royalty rates. Currently, gold price is above $4,900, almost $5,000 again. So if it takes effect, the royalty rate is going to move from the current 5% to 12%. So that's a huge jump for the industry players, because they're currently paying 5%. After the almost 20 sitting days in Parliament, they're going to start paying 12% currently, because the price of gold right now is almost $5,000. So this is what the industry is looking at. But then the other minerals get 5%, manganese, diamond, bauxite, and the others, they get 5%. But again, gold and lithium, and the gold producers mainly are the ones pushing against this. They are going to get from 5 to 12%. And if it takes effect, they're going to pay 12%.
Weston, more than 4,000 per ounce. Why the push?
You know, it's interesting to know that the sector has seen enormous potential. One thing that many are saying could be a high risk is the fact that, considering lithium, for instance, when government was trying to renegotiate for the lithium deal, the price was very high until the market decided to dance to a different tune. And that's how lithium prices go down, calling for renegotiation of previously signed contract. And that is a huge risk. Many have also attuned those same risks to the gold market, because if we are to go into these risks and therefore trying to, as much as possible, get these royalties from the mining firms. So far, 16 of the mining firms are subscribed to the Ghana Chamber of Commerce. Only the few, over 20 of them, 60%. Yeah, so it means 25. that, cumulatively, they contribute over 11% in terms of revenue related to the especially the mineral sector. And that is a key conversation that needs to be had there. That means that the sector is very enormous, and therefore, if we are to manage policy structures, it has to be done prudently to ensure the risk does not fall back on government. Government wants its royalties good, but if you look at operational costs that they in tune, they are mostly high. If you look at the various tax build-up on these companies, it's also huge. Firstly, government gets a lot from corporate income tax. The government also charges grand levy on these companies. They charge payee withholding taxes, and therefore that is the huge area they make profit. If you compare Ghana's overall mining sector to other African countries, it appears now it's about Which country has a strong and free investment destination as a country? We are battling for that notch. Already we are losing to Cote d'Ivoire and some other sub-Saharan African countries.
Even Burkina Faso.
Exactly.
Yeah.
So where can business investors make profit? When you look at the margin, the risks involved, all these are what market watchers make sure they dispose to investors outside the terrain of Africa. Africa is a landmine for the world. In terms of carbon, in terms of minerals, we still have enough reserves that can last us over 10 decades. And therefore, it's important that as Ghana goes to this negotiation, we have to consider these factors. We shouldn't just give out wholly, but I think those conversations need to be broadly had before we go into any signatories.
Well, the curve is actually rising, and Caleb, I understand that the industry are not happy with that 5 to 12% because they know the kind of impact that will bring. And if you talk to people who are actually familiar with this issue, one thing they will say is that, well, at the moment, although there's a gold boom, but investors are looking for alternatives, right? Especially in places like Burkina Faso and other African countries. Well, we understand that the industry wants a very small band. What are they looking for, and why is it becoming even difficult for them to accept this new sliding rate?
I think so. To understand the industry's perspective, you have to fully understand why they are calling for this. So now the government says they want 5 to 12%. The industry says they want 4 to about 8%. And they also have a 1% levy on profits that will go directly to the community. We saw this in the lithium lease, where there was a 1% community development fund. Now, the Chamber of Mines argues that they're already paying all of this.
Yeah, okay.
No, they have 5% royalty rates.
Oh.
They have 35% corporate income tax. Now, this is where government gets chunk of its revenue from the mining sector. Last year, they got about $10 billion, and the entire revenue from the mining sector was about $17 billion. So if you have $10 billion from corporate income tax, and you have about $5 billion from the royalty rates, it just means that majority of the focus should be on the corporate income tax. But then the problem is that when you're calculating royalty rates, it's on your revenue. So royalty rates, you don't account for your expenses. Once you sell the gold, they deduct the royalty rates. But then to get your corporate income tax, you have to deduct your royalties.
There's a lot of discounting for,
your expenses, operational costs, all of that before you get your profits. Then you tax the 35% on the profits. So this is why government gets a lot from corporate income tax. And in other jurisdictions, in fact, they don't pay royalties on revenue. They pay royalties on profits. Okay. So when the mine is profitable, then they pay royalties on that. So the chamber is saying that they pay this, they pay 35% CIT, they also pay 3% growth and sustainability levy. Now this was about 1.5%, and the new government increased it to 3% and increased the sunset clause. It was supposed to end, I think, 2026 this year, but they increased it to 2028. So this again is also charged on your revenue. Yeah. So if you get a picture, it means that if you have your total revenue, you're already taking out royalties, you're taking out 3% GSL, that's the growth and sustainability levy. Once you take that out and then you account for your expenses, the profits base is already low.
Yeah.
Then you come and add on top of that 35% CIT. Then again, we have 10% free carried interest. Now, it means that 10% of the mine's operations belong to the government. The government didn't put any capital down for that. Again, this will be deducted. So there are so many of them. I didn't even add all of this. Yeah. So if you add all of this, the effective tax rates currently is about 50%. Some go as low as 45%. So in very basic terms, it means that if the mining company makes 100 cedis, the state takes 50 cedis. That's very basic. So the chamber is arguing that this is already burdensome. But they do understand that when prices go up, the government wants to take some. Now, the other side of the coin too is that when prices go very high, as we are seeing now, about $4,500, almost $5,000 per ounce, mining companies usually go and mine in areas that were previously unprofitable. So when they go and mine in those areas, they increase their expenses. So if you increase the royalties and you take away that from their revenue, you are taking your GSL again from the revenue, then you have your increased operational costs because now prices are high and you can go further down the mine to get more gold ore and all of that. You're increasing your expenses. And once that happens, your profit shrinks. Once your profit shrinks, the CIT that you used to charge on also come down. Yeah. Because you've taken so much from the revenue side that when it comes to the profit side, it's lower for the government to take. So it means that the government is now doing a balancing act. They are taking more from royalties, but they're getting less from CIT. And like I said earlier, CIT is where the government gets a chunk of the money. Last year, they got about $10 billion compared to about $5 billion from the royalty rate. So it means that if moving forward, the government wants to focus on and policymakers want to, shift their focus, they can take, lessons from other countries where they charge majority of their royalties or their taxes on the profits and not on revenue. Because once you have revenue, it's going to make it very difficult for smaller mines to break even, make profits and be profitable. And also, the mining community say that in other jurisdictions like Côte d'Ivoire, they are very friendly these days and they are pulling almost all the investments. So if they're going to be increasing your royalty rates from 5% to 12%, that's a huge jump. And this is going to affect the mining companies heavily, and then investments will reduce if people want to come inside and develop more mines once they see your royalty rates. And also, let me add that if you add the new structure, that's the 12%, you're going to get an effective rate of about 68%. Now, this is from the Chamber's calculations. 68 means, again, if the mine makes 100 cedis, you go and pay 68 cedis to the government.
You're get about 42 cedis.
About 42 cedis for the mine.
Already there's a policy on forex retention, so many other factors.
Exactly. So the mine say, once this happens, there's going to be pressure on them, and then they can't move forward to break even and all of that. So they want government to carefully analyze the numbers. And again, I reached out to the lands ministry to try and get their numbers to compare that with the chamber's numbers. Because once you have numbers from the chamber, before a government introduces a policy, they need to do analysis. They need to do modeling, they need to do forecasting.
Cost benefit analysis. Forecast.
And then we've been chasing this for, I think, about 2 weeks now. We've not gotten it. But we got that from the Chamber of Mines. And they say it's going to be 68%. And this is going to be the highest in the world.
That's going to be interesting. The fact that this is going to affect the whole sector, a sector that we as examine has a huge prospect going forward. Since Trump came into power, we've seen commodity prices rising consistently. All we keep saying is even presently, the central bank has advocated that indeed, due to the performance of commodities, we have enough reserves to boost our economy.
On the back of gold.
Exactly. And these are good numbers. But one thing that we shouldn't forget, and as much as they rise quickly, they fall quickly.
On Friday, we spoke about the cocoa sector and how this is affecting the farmers, cocoa board and all of that.
If we have to take a cue from any commodities now, it should be cocoa. Because cocoa rose to more than $10,000. $12,000 per ton. And now it's the same story with gold. But with gold, I think that what is really driving this is that you see the kind of outlook around the dollar currently, where it used to be the safe haven in terms of the currency of reserve. But at the moment, we are seeing what is happening, to the dollar. Japan yesterday successfully elected a new president, and the whole buzz around it is that once Japan has gotten it right, been able to elect somebody who is in the same domain as Trump, then they are going to demand more US assets, going to increase the strength of the dollar. And once the strength of the dollar increases, we all know where gold possibly will be heading to, especially if you don't get China to come along. So with this new approach and this new regime that we want to introduce, the key question I want to ask is, have we done the cost-benefit analysis, the geopolitical, equation? Have we done all the analysis to see which side we are on, and if any of the variables changes, where we will possibly land ourselves in? Because these mines will be here. They have great investments anyway. But if it's not profitable, we all know they will sell and leave.
Yeah. So I think the good news is that for the short term, gold price will remain elevated. Yeah. Because once Trump is in the White House, and the ones
these days, if you say gold price will remain elevated, it's very relative. Which band are we talking about? If you say elevated, is it about 3,000, about 2,000?
Exactly, about 3,000 already elevated.
Because if you tell me 1,500, 2,000, Charlie, the thing has gone as high as $5,000. Any price lower than that, to me, in relative terms, is very, very small. And so, being elevated for me, I think is very, very subjective, at this moment.
I think so. Most of the major factors that push gold prices up still remain. Trump's policies. And then because of the way Trump is moving, most of the other leaders are trying to dump dollars. They're trying to move away from holding dollars and more to gold. So if you check out with almost all the central banks in the world currently, they keep stockpiling their gold. And we have China, for example. China is doubling down on the gold purchases and trying to reduce their reliance on the dollar. Yeah. So most of these factors that are pushing gold prices up still remain. So in my view, for the short term, prices are going to remain up.
Great.
But then let's go back to the previous slide. Let me show you something. So this was in the 1980s.
Whoa.
Gold prices reached its peak in 1980, and then it fell down. It stayed below that level in the 1980s till
For a long time.
That was about 27 years. So for 27 years, even though gold prices rose up rapidly, they did not reach that same level again for 27 years.
And in fact, you see another interesting trend I'm seeing, Winston, is the fact that even after staying very elevated, in Caleb's words, for 27 years, see what happened next. It didn't actually go down, but we saw another spike.
2004 to 2015.
Exactly.
Yeah.
But I mean, as we speak, the Lands and Natural Resource Minister is actually in South Africa for the Indiba, conference, trying to hold new investors. How do we sell a country at the moment, trying to demand for that sliding rate? Industry is pushing back already. The gold board has taken a significant component of our gold, the ASM side.
Small scale sector.
Exactly. How are we going to sell Ghana to the investors outside, especially looking at the current situation? What story are we going to tell them? And the government already have plans to possibly change their mind in terms of this new regime that they want to bring along?
Currently, under our law, one of the benefits mining firms tend to enjoy is basically exemption from payment of import duty, and exemption staff from income tax on furnished accommodation, and also personal remittances quota is given to them. These are some.
So these are the freebies.
Yeah, freebies under the law. But if you look at it from the holistic picture, it's important that government restructure our sector's policy. I heard the minister on several conferences, as I was reporting, still say that we are losing out hugely. Over the years, the margin of investment has dwindled. There were conversations that happened. I mean, let's take the petroleum sector, for instance. There were Springfield conversations,
it was over tax,
battles, going to arbitrations. All of these send bad sentiment to a sector that has very thriving profitability. In the last 10 years, we've seen the petroleum sector development. We say, yes, we've gone some to back our reserves, our deficits in our budget year by year, but how has it reflected in overall development as a nation? If you look at it, it hasn't been consistent. That's the challenge. How we manage our oil revenue as against we managing what we are doing. The difference is that in terms of gold, we are seeing direct injection into the performance of the current cedi, which has been attributed by the central bank. So there are data to that effect. But to make our sector quite attractive means we have to open up to policy restructuring. What is happening across the world, averagely, how can we implicate it in our current dispensation? It is Sub-Saharan Africa. How can we still remain competitive? It's a key question the minister has to go back to review. Secondly, I think it has to do with processing. How quick and how conditional are our contract being signed? Government has signed several contracts with most of investors, but if you go back into detail, there has been constant renegotiation within short period of time because there have been change of government affecting previous agreement. And this certainly doesn't give good signal to investors. Investors want stable environment to do business. So if one party comes to power, negotiate, another party comes to power, renegotiate, they feel, no, I can't keep my money here because if I look at how much I've invested, I may lose out eventually.
The sentiment around the gold space is very, very high. And in fact, Winston spoke about licenses, right? And one big bane of the chamber at the moment is how quickly government is able to issue licenses to especially these illegal, big scale or large scale miners. And the argument is that, well, relatively, if you look at Ghana's, license issuance, there's a lot of delay around it where almost everybody wants to get their part of the bargain, especially if you look at, the background stories to how we've issued licenses. But governments also have their own, side of the story to tell and say that, well, we are trying to curb a very, devastating menace on our hands right now, which is illegal mining. We want to make sure that the license we issue out, people are doing the right things at the moment. Now, I want you to tell me, you have been with the industry for a while now. In terms of licensing and how quickly they are able to get licensed, do you think that in relative terms, in our space, it's one that we possibly have to take a real look at it if we really want to attract new investors like the way the lands minister is in South Africa trying to do?
I think so. To do this comparison, let's just go to Cote d'Ivoire. While we've been bustling Cote d'Ivoire with the lithium deal and the way it has stalled since I think 2023 or so. Cote Cote d'Ivoire are moving forward. The same Atlantic Lithium is in Cote d'Ivoire. They've done exploration. They're moving forward their exploration. And there are indications that they might find enough lithium in commercial quantities to start mining over there. So in the same period that we are...
that happens?
So in the same period that we are battling and trying to iron out details with our league, which is important, by the way, because we need to make sure that the state benefits maximum from its natural resource and all of that. Cote d'Ivoire, on the other hand, within the same period, about 3 years now, they've moved forward and then they're about to, if there's a find there, they'll start mining and possibly start mining before they mine in Ghana. The same company, they came to Ghana first, go elites in Ghana. The indication that they might start mining in Cote d'Ivoire, that they started looking after they came to Ghana. So I think that's all the whole story. And again, it's not just about the licensing regime and the time of, but then with our ports. If you look across the West African picture, most of the time, the time it takes to clear goods at the ports are longer than that of other countries.
Basically 21 days. And that was something that the World Bank last week in their report indicated that is one thing that is driving away investors from coming to Ghana. That is a very good one.
Yeah, because if you're a company, and this is not just for the mining company, in fact, the Agri Chamber, the Chamber of Agribusiness this morning released a statement saying that Ghana's regime is not that favorable and they might lose, I think, about $21 billion over the next 5 years. And in that statement, they point out to the fact that at ports, the port delays are too much. If you compare to other countries, some are doing 8 days. We are doing about 14 to 21 days. So if you're a company, you are bringing in equipment to support your activities, and you have to wait about 21 days just to clear your equipment, you're going to take a toll on them. And the other companies, again, are offering tax exemptions. So for the machinery and things you bring to the country, you get tax exemptions, and then you can process it faster, pay cheaper from the port, and then start excavation quickly. So I think it's a holistic argument that we need to start looking at. We've heard from the majority leader that the Lands Ministry is taking a new bill to overhaul the entire mining sector. Unfortunately, we've not seen the draft bill yet. I've been speaking with some sources and they've not seen it yet. The miners have not seen it yet and all of that. So we need to understand what's going to change in the entire space. And I think the most important thing to it is that if you look at from the gold miners' point of view, they are willing to engage. And if you're in South Africa trying to pull in more investors, the sentiment on the ground here with the miners here is that meet us halfway, try and let's dialogue and all of that. But then the government has not released its own numbers. The numbers out there are from the industry. So if you're going to bring in players, they're going to see the numbers from the industry. And they're going to make their decision based on the number they see from the industry, because they are the ones currently doing the work on the ground. So to pull in more investment, we need more transparency in the system. We need more, I keep saying analysis. We need to understand the reasoning behind the policies. Because sometimes we all agree that we need to benefit more from our mining, because we've been mining for a long time. People say, where's the money? But in fact, if you look at the royalty space, we made 20 billion cedis since 2011. The question is, where are the 20 billion cedis gone into? Again, if you look at the oil mining side of things, we've ring-fenced the entire oil mining revenue. So we know exactly how much we made from oil mining. We made, I think, $11 billion since 2011.
But we're not the same for gold, right?
Exactly, because of the way the accounting is done for gold. For the oil industry, the corporate taxes, almost every levy you pay is traced by PIAC and then they report on it. But then for gold, it's not traced. The only thing that we can find is the royalty rates, because in the budget there's a line item for the royalties. Aside that, it's the chamber that actually announces how much they've paid in CIT and all of that before we can track these things. So the overhaul of the entire mining act, we need to follow the money. We need to know how much exactly we are getting from gold mining, how much we are getting from royalties, how much we are getting from the CIT. Again, CIT is where majority of the revenue comes from. So if majority of revenue comes from CIT, we need to track CIT. And then, because even though we all talk about royalties, the money is actually coming from the CIT, the corporate income tax. So tracking all the money along the value chain, and again, that's when we step into value addition. Well, with value addition, because that's where you are going to transform the country and not by.
I think that particular, according to the minister himself, that is the CEO of Gold Board, that hopefully this year the tracking system will be in place and we'll be assessing and monitoring, because for now the percentage of gold that will come to them is what we can know. But I don't know whether there's a proposition to include all the gold mined at various firms, mining firms in the country, including those by artisanal small-scale miners in the country. With that being said, if we should have that tracing system, which he said is quite complex, but we hope that when the time comes, it could be quite reflective of the reality in the market, because there has been increase in smuggling that goes unaccounted for, and thus the number we smuggle end up being more than what we can calculate or account for as of now. But with this, I'm sure we can make it happen.
Well, I think that it's not a good time to talk about the tax regime, right? Because it's everything in this space, right? Would you say that government has done enough in terms of its part of the bargain? Because at the moment, this particular government says that, well, if you are a new mining company and you are hoping to come to Ghana, your exploration and then your
the VAT on all those things.
There'll be no VAT, 0% VAT on your mining, exploration.
Prospect.
Exactly. Yeah. And that's one thing government has done. Well, and you spoke about the 3% sustainability levy, which was hiked to about 3%, 1.5 to 3%. And government is saying that, well, we've heard your cries. We also want to get a big part of the cake. That's why we are introducing that 5 to 12%. It's not cast in stone that you have to increase. It is actually a conditional, a rate at the moment. As gold prices go up by $500, dollars, that's when we get to increase the rate by 1 percentage point. So in this case, government has decided that, well, we've heard you. The bill is before Parliament now. But what we can do for you as we wait is to cut the sustainability levy by some 2 percentage points to now 1%. Do you think that the government has done enough in its part of the tax regime at the moment to make sure that the mining sector looks strong to be able to carry on with its activities?
That is one move the sector is a welcome initially, because it's been a long time that they've received any freebies from government because of how interest and intensive in terms of capital that goes into the sector. If you look at how much they make, operational cost alone is huge. If you look at the overhead costs, if you look at the investment costs, and mining, trust me, the earth is all over Africa. Everywhere there's earth. And the countries that are rich in resource mines has the advantage. Globally, the resource is priced globally. So irrespective of where you find the mineral, you have a global price standard to sell it. So if it's being sold in Cote d'Ivoire as a global price, being sold, just that the difference will be in currency, which is the main difference. So that is domestic currency on international front. But internationally, in dollar terms, it's the same everywhere. So it's important for us to understand that we have fair playing ground, but the difference is, what do you offer? If government, are we in a position as a nation to offer as much as we can give? Or are we in a position to say, due to our current circumstances, that there's still building regulation to make it strong enough to benefit potentially? But one thing you realize in most of the mining firms is their corporate social responsibility. They tend to increase the margins for their corporate social responsibility, building schools, hospitals.
Can we even track them?
That's very interesting. But if you go through their financials, you'll see them there, especially their annual financial statement. They do a lot in communities. They invest in schools. They build structures. They support scholarships and all that. And you get to experience that development in those key communities. However, the key challenge is whether they have the quality to employ a lot of Ghanaians in those institutions. Because we say the sector is making enough, but the reflection in terms of having domestic workers in those mining firms is the key, because it's a specialized sector. And if you don't have those people trained, you can't really have the resource and skills development that is required in those sectors.
Now, Caleb, we'll come to the mining royalties, the revenues, right? The mineral royalties revenue. My question is, there's a big talk about tax regime, right? I've asked Winston, he said his own part. He said that, or he believes that at the moment, it's about question. We should ask ourselves, are we offering the fair playing ground for investors to come and then possibly dance to a very good tune? He's asked that question. My question to you is, at the moment, the industry is pushing for a band which is between the proposed band of government, because government is saying 5 to 12. They are saying that 4 to 8 preferably, with no sustainability levy. Yeah. But government is also saying that, well, we can cut about 2 percentage points, pay the 1%. We are taking away the VAT on exploration and all other activities in terms of when you're coming into the space. The question is, do you think that this is actually giving the industry what it takes to actually operate, or they possibly will be knocking at the door of government asking for more freebies?
Well, I think if you look at the Ghana's mining tax regime, it's one of the most elaborate on the continent and even other parts of the world. When it comes to laws, we have the laws. When it comes to getting benefits from the mining company, like I said, currently we are taking about more than 50% effective tax rates, from 45 to 50%. So already the government is taking a lot from these mining companies. again, we still spoke about the CSR activities. Even in my view, I don't think companies should be obligated to do CSR activities. Because once they pay the taxes and once they pay how much you tell them to pay, it's the government's responsibility to take care of these things, not the company. But then again, it is up for debate. So when it comes to our laws, we have the laws. Now the question more should be more about the utilization, how we're using the revenue from mineral royalties, how we spend this 20 billion since 2011. How we using the royalties or the mineral royalties to impact change in the community.
There's no PIAC report like we have.
It's interesting that Caleb said something about a CSR activity, which I like to chip in briefly, is the fact that if these companies, especially mining companies, don't engage in CSR, you have the tendency to have serious resistance
pushback from the community.
From those communities. And this happens especially in other mining companies. For instance, look at what Nigeria, the Sahara regions, especially companies that have minings and into explorations, they tend to have rebel groups, gangs coming up because they say you are mining our
We have same in Ghana,
exactly.
right?
The illegal miners.
I mean that we see rebels and thugs actually attacking mining companies, and we all know that the one responsibility of the Ghana Armed Forces is to actually give protection to some of these big mines. We see that, especially in communities that they feel that, well, you've been here for a long time, we are not seeing anything you're doing, you're only possibly building schools and giving scholarship, some of whom we may never even benefit from. We've seen that pushback from communities in Ghana. And so the question is, now that we are actually expanding our tax net, trying to make sure that we get a lot from these mining companies, the question is, how much can they even make after we pass this new regime to even go back to the communities and say that we are giving you back some of what we actually got from mining what belongs to you?
I think, and this wrapping up, I think, so we need to understand the numbers from the government. The ministry needs to provide the numbers because we've seen the numbers from the chamber and it's not encouraging. The numbers we've seen, 68% effective tax rates, is going to, it's not going to attract investment. So we need to understand the government. How did they come up with the 5 to 12%? Within the 5 to 12%, does it leave room for mines to be actually sustainable, make profits, recoup their investments, and keep mining to the end of their leases? This is what we need to see. We need to understand because we've seen from one side, but we need to understand from the government side. Are the mining companies, hiding their numbers, increasing the expenses and all of that to reduce the CIT they pay? Is that why the government is increasing royalties? We need to understand because when it comes to policy, it needs to have, a concrete reason for introducing a policy. Not just increasing because we want to get more revenue. Getting more revenue at the detriment of the entire sector is not a good thing. So we need to understand from the government, we need to release their fiscals, their modeling, their analysis for us to understand. And then moving forward, we can engage with both sides, the miners. We tell you, this is what the government said. This from the government's books. Does it align with your books? Are you cooking your numbers? All of that. So we need to understand from both sides before we can make a definite conclusion.
Listen, I want you to look at this. I mean, I'm sure definitely before government will make any decision, they look at some of these graphs and curves and they've seen how royalties are actually increasing. 2025, for instance, half-year report showing you an amount they got more than they actually did in 2023. 3.3
billion in 2025. In 2022, they were ranging around between 2019 and 2022, we are about 1 billion, basically between 1.7, 1.3. If you look at the margin between 2022 and 2023, from COVID moment, commodity prices went up.
2024 is huge.
So
and it's mainly because of the price of gold. The price of gold.
Exactly. Gold has been quite dancing, changing the figures here. But if you look at this side, basically in 2023, and comparatively to the Galamsey conversation, it became incremental. Even going into election, we're making so much. If you look at the GDP growth, gold was making so much. Extractive sector consistently 2024 was performing greatly on that numbers there.
Well, this has been a show for you beyond the numbers. Now we come to you 1 o'clock to 2 p.m. On Monday, Wednesday, same time, 1 to 2 p.m. And then on Friday, 3:30 to 4:30. The show is now 1 hour, bringing you full analysis. We begin with key headlines in the business space. Then we go to Market Watch, where we speak to those who matter, IC Capital, Data Bank Research, and all the guys who are actually involved in this space. Then we bring you the big analysis of that big, business story of the day. So stay with us every Monday, Wednesday, and Friday. This has been Beyond the Numbers with me, Isaac Ofejan. This was
Western Turkey,
Caleb Zebulon.
And the pulse is next. Stay with Joy News, independent, fearless, and credible.